And good day. This is the Eye of the Storm podcast with the big picture technical update for the S&P 500, being recorded on Saturday, April the 27th, 2024. I am going to start here with the SPX and the cash market, and I'm going to continue on an Elliott basis to really covering and showing together two preferred counts. I'm labeling one the A preferred count, and the other one is the B preferred count. So I'm going to start with actually the A version. I know there's a big B up there at the top, but the A version, which continues to suggest that we've completed the primary B wave and that we're in the beginning stages of a primary C wave decline. Which in the near term carries a much more bearish view versus the bullish view, which is presented in the B version of the preferred counts that I carry. So there's only two. All right, so here in the cash, we're looking at the A version, and that is where primary wave B is complete, and that we're in the beginning stages of a primary C wave down. Now, just going back, it's October of 2022, where we had the primary A wave low put in, and then we started on the venture. And the venture is called a primary B wave. And the primary B wave ended up being an irregular B wave, which means it surpassed the existing high or the starting point of wave A, which here in the cash market was 4,818. And that was back in 2022, in January of 2022. We surpassed that level. So under what Elliott gave us, we have two additional fib levels that we put into place to determine how high this wave pattern could get. And that is 1.236, where wave B would be 1.236 or 1.382 times the length of the A wave. 1.382 is 5312, and it consistently has stayed right there, and can come into play again if the bullish version or the B side of this preferred count is what's in force. I'm going to break this down further because I first want to go over what took place during the week in terms of earnings and how that affected our markets, what we have kind of coming up in earnings on Monday and Tuesday. And then Wednesday, the other large factor that the market's going to be hanging its hopes and dreams or whatever on is the Fed meeting, which we get the results of that meeting on May 1st, Wednesday. So let's dive in and see what we can do with this technical update. And what I'm going to attempt to show you, once I give you all that and we get into that technical side, I want to go over where we are and what I would expect to happen if either the A or the B version is the one that's in play. I believe that we're at that juncture. And it's easier to explain because I'm going to talk about the put and the call wall. Now that's options, and it's also something that really has been ruling our market. The options flows, you've heard me talk about it before. I don't want to get into too great of a detail there, but I will talk about a call wall and a put wall because we've seen both now pushed into action, and one has not been significantly broken. And so we're going to see what happens here. All right, so first, earnings. We had Meta, Microsoft, and Google report last week. Those are three of the Mag 7 stocks. They continue to carry very heavy weight inside the S&P 500. So Meta, basically not bad earnings, showed that they were making money, showed they're still on track, et cetera, but the company announced that they were going to spend $40 billion on continued development of artificial intelligence and their virtual reality tools, their products that they're building there. That was not so well received by the market, and the stock then proceeded to basically drop close to $100 total before beginning to recover and finishing the week. Now, mind you, it started 496. That's where the market was just prior to the earnings being announced. And it traded all the way down to just below 400 and then recovered some, and on Friday closed at 443. So basically, it had gone down and come back almost 50%. So pretty decent. Now, Google and Microsoft both received well by the market, and so they provided a little bit of an uplift. What we have coming on Monday is we have MSTR and RIG and others, and then as well as PayPal, Lilly, Archer Daniels, McDonald's, and Coca-Cola. So there could be some market movers in there, particularly, Eli Lilly could move the market, but it doesn't have as heavy of a weighting as what's going to come up on Tuesday. And that is AMD, Amazon, Starbucks, SMCI, the new member for the SPX, gets its play in this, or, it's fun in the sun on Tuesday. And so I'm just going to add there. And as the week progresses and we have additional numbers coming out, I will review them, but I'll do that via the Elliott Wave update. So right now we're just going to cover Monday and Tuesday. And what becomes important more on Tuesday, I believe we'll get some type of reaction. Jumping into the Elliott picture. Again, the count that I'm showing here on the cash market is one that would suggest that we are in the beginning stages of the primary C wave. So we've done primary A, B, C, complete primary B. We're starting down. It's a large move. It is a large move. And if wave B is going to be equal to wave A, which it could, it's going to come in at 39.37. That would be the level. Personally, we're looking for wave C to break the low, the 2022 low, which was at 35, and actually likely kind of come down here, possibly 31.17, but still above 3,000. But a decent drop from where we are. I don't want to go into the fundamental reasons, but let me just say that there is enough excess capital in the system, and it's moving around, and it continues to come into play as we trade. There's a lot of money sitting there. So, and it gets much more complicated because we break it down and we can look at just all of the economics, all of the amount of capital that has been put into the banking system, that's been put into the system, is truly very deep and sometimes can be hard to understand, because yes, we all want a good or strong economy. Strong economy is people have jobs, they're making money, they're able to pay their taxes, they're able to buy the food, et cetera, but we're getting priced out. So what happens is like it's a constantly hungry beast that must be fed, and it's actually called inflation, because it's going to cost us more to live. It's like, our earnings get hacked away by living costs. Now, that's a whole nother beast. I'm not going into that fundamental right now. We're going to keep our eye focused on the technical picture. So again, bringing it down, here we have our ABC, and now we're going to go inside here. So I'm going to open this up. And let's see if I can do it this way. There we go. So there's the high. So now what we're looking at is the more bearish side of the count right now. Again, if we're in a C wave down, I'm just going to take it in stages. So this particular stage, keeping it near term, possibly next week, maybe even the week after, if this count is the one that's in play, then the market would need to begin to decline. And here's why. If I'm counting this as a minute 1, 2, and 3, and this would have to be minute wave 4, here's what it cannot do, and it's already getting itself up there. Wave 1 is all the way up here at 51, let me get that low for you, 51.84. The market cannot go above that level. Wave 4 cannot overlap wave 1. That's on a minute degree. That's plenty of room, actually. And when I was inside here, as I presented last week, where it was like 1, 2, and the third wave was down here. And so in that case, a minuet degree, it was getting a little bit too big. Now, not that it's a mortal sin to move the third wave up, which does change upside levels. And it's not that I'm accommodating the market. I'm just saying that that's where the rule would be broken. But here's how I'm going to leave this. This count really has maybe a little bit more room, but I would think that above the call wall, right now it's closed at it. It got up above, but you see what happened? It didn't get real far, and they sold it back down to it. Now that was more for that expiration on Friday, but that level continues to house calls, a call wall and subsequent expirations coming up. Now, so in actuality, it probably could go out to the May 17th expiration to see what it looks like out there. Now, if I've got an ABC as complete, or if there's slight needs a little bit more, we allow for 5140. If it breaks that call wall by going there, it could be a very quick move, and it could actually then begin to invalidate this particular count. So that's a signal that I'm going to be paying very close attention to. What actually happens with that call wall now? The other side of that coin is what we saw happen when the market last Friday broke the put wall, which was at 5,000. And that was right here. And that was on the 19th. You can see once it was broken, the market dropped to 49.67 initially, rallied a little bit, and then finished the day down at 49.53. So the put wall was broken, and it accelerated in selling. So a lot of things get sold to push the cash market down as low as it got. If the call wall is going to get broken, see that? That's what I'd be looking for. That got up to it, but did not. The follow through didn't come in. So saved, and it came back down. Now, if it breaks again and can get up above this, it should or may trigger subsequent additional buying, which would then push this index more away from being a fourth wave and more that it is in what I will present in the futures market, that we're in an upswing. And this is actually a minor fourth wave, and that we're in a minor fifth wave up. And then we'd be looking eventually for the market to come up and to break 52.64, which is the existing high from the end of March. So that's what I'd be looking for before, again, that primary B wave would be complete. So this is I believe, the juncture that we're at, and it really was it'll surround that call wall. Now, if the market stays below 5184, gets up there and turns and drops strongly, well, then it is a 4. So again, we're at that juncture, and the wave pattern itself may be very deceiving, going, well, I don't know, that doesn't look right. It's a little bit too big, et cetera, et cetera. But yet the market turns and drops. And if it drops significantly, then that's going to be enough to really put the pressure on a bullish count to not be invalidated. Right now, the pressure is on this more bearish count for its validity, because if we get that pop, could be enough to invalidate the count. So moving averages, you can see the 50, the 200 is down below. So it's in position. The 50 going flat. What needs to happen now to give us more grounding in the fact that we're going higher is the 13 and the 20, which both have stopped, turned, and are going higher due to that gap higher move that we got after the earnings. That if that continues and it needs to break above the 50, once it's broken above the 50, even on the 4-hour chart, it's going to be more of a bullish picture. We'll be looking for this count to be invalidated and for then to move more firmly into a minor wave 5. And we have an RSI that's kind of cresting. And if that continues and starts to go down, well, then the relative strength is going to tell us something different than what maybe the market is actually doing. And that would contribute to a turn. All right, let's go take a look at the futures market. So same deal. Let me go out to the daily. So there is the C wave or the A wave all the way down there. And see, this one will work because this is basis the June contract, which is why those are all the way down there. So here we have what we got going on here is that we have A, B, and we're still in the C wave. And what we've got thus far, this is the B version. What we've got thus far is minor waves 1, 2, and minor 3 finished at that high, which in the case of the futures market was 5,333. And now what we're going on now is we've just moved down and just completed at last Friday's lows, which in the futures market was at 4,963. But we did it in an ABC, completed minor 4, and we're launching higher in a minor 5th wave. Initially, we have resistance that truly begins here. 0.618 is 5,367, and that would be putting in a new high. Not the most common. Your most common is actually way up here at 5,617. That is where wave 5 would be equal to wave 1. I know there are a lot of people that actually would like that, and that's fine. That's great. Here is the technical picture that says, yep, it is possible. Doesn't mean that's going to happen. What that would become first, and 618 is actually about third, but it can run a close second, as a matter of fact, in this particular case, where we're seeing it, and it's completing a move. It's not coming internally, it is completing a larger move. And the market could get real tired, but still, due to earnings, still due to some narrative, give itself a giant boost and go up and make a new high. So that still exists. I'm going to come back down to the 4-hour chart, and we're going to take a look inside, because what we're really looking at is what's the opposite of what we just saw. So again, if we're looking at the call wall, if the put wall was at 5,100, the call wall is going to be exactly where this market closed, 5,131, because there's still premium in the future. We'll start to see that premium come out as time progresses and we get into the month of May, because these expire in June. So again, what we're looking at, 3, and there is 4 coming down, right? Come on. There it is. So what we have is this initial, and it's not even clean. I got to tell you, I'm allowing it, but it's not clean. 1, 2, and then 1, 2, 3, 4, and then a 5. It's ugly. I don't particularly care for it, but I will label it as 1. And then we have an ABC for wave 2. Then again, 1, 2, 1, 2. This, here's the gig. If indeed it's a 1, 2 and another 1, 2, then the market needs to turn and just take off. That's the point. We're at that point. This call wall gets smashed and unleashes enough flow to the upside that we get up to 51.87. Now, as a third wave, right? So if we're going minute 1, minute 2, minute wave 3 of minor wave 5 really should get up to 52.89. I'm not joking. It should just kind of go. We closed at 51.31. That's a 150-point rally. Couple of days. But it should get itself up there. Now, what do we got again hanging over this thing? Not only we have earnings, right? And as the week progresses, but again, on Wednesday, we have a Fed meeting, and that's when they come out with their decision. And then we get the same Fed conference call, conference, press conference. If again, I don't see anything being priced in to the bond market that, we're going to get a cut. Absolutely not seeing any way, shape, or form. With rates hovering closer to 4.5, 4.75 via the 30-year and the 10-year. And if we go all the way down to T-bills, they're still sitting between 5.25 and 5.5. So more in tune that the market is not changing. So in other words, interest rates again remain unchanged. And then we'll listen to probably the same rhetoric that, we're paying very close attention. The economy continues on a robust level, even though some of the numbers that came out last week do reflect on a little bit of a slowing in particular components of our economy. So didn't really do that much damage, and it was all within the GDP. Didn't do that much damage, but enough to kind of perk the attention. But right now, things, if they're going to move, it will be technical, in my view, and it'll be breaking that call wall. And you may have good news via earnings, and we may have steady news from the Fed, which would create an atmosphere it was okay to buy. And then, the earnings, continuation of the earnings during the week would continue to prop it up. Of note, in all fairness, May 2nd, I've always thought it was further away, but it's like next week. May 2nd, Apple reports. So we have enough of the mag in play next week as well. So we'll be keeping our eyes open. Again, Apple last week, they made a little bit of a play, tried to get themselves to 170. Didn't necessarily work, but it may have on the put side. So within here, what the market needs to show us, exactly what I talked about, it needs to break that call wall, close right at it. A little bit of a gap from the futures market tomorrow would be enough to do it, because if we get that support from the equity side, and then we might get the gap as well in the SPX, and that could be enough where they are forced to react. And don't really know just yet how much, if enough, gamma was removed from Friday's expiration. I don't know, which was right at that call wall. So we yet to be inputted and seen. Now, moving averages, well, here again, we've now begun to get above that 50, which basically was sitting just below the call wall at 5,100. So the 13's above it, the 20 is getting ready to get above it, and that would suggest that leans a little bit more heavy, that we're going to get a more positive opening for tomorrow, when Globex restarts, and then Monday we get up through it and we continue to head up. That's what I'm looking for, to see which one actually will come in. Now, let me take a quick look to see what in terms of data comes out next week. Tuesday, all we have is consumer credit. Wednesday, wholesale inventories. And we got a bunch of Fed guys out talking. Excuse me, that's the wrong week. Next week, take it all back. Let's start over. Monday, nothing. Tuesday, employment cost index, Chicago Business Barometer, and consumer confidence. On Wednesday, ADP employment, construction spending, ISM manufacturing. Boy, they have a lot going on there. Job openings, and then we get the interest rate decision as well. Wednesday could be Wednesday could be an interesting day. Plus the earnings, what we got. Thursday, initial jobless claims, U.S. trade deficit, productivity, and factory orders. Friday, May the 3rd, we get the employment report and ISM services. I always forget the very beginning of the month, we get some juice that comes out right away. All can just send it in either direction. And that, folks, is my message about where we're at. I think we really will. I'm hoping we get clarity in what the market's intentions are. Excuse me, technically moving forward. And I think we're at that point where either breaks it and we go up, or follows through and heads down and goes for that put wall, which in the S&P and the SPX is at SPX 5,000 is the put wall. So we have a 100-point range that if the market sits in, everybody's got an iron condor or a butterfly on, because I'm telling you, it keeps hovering around and going in between rather than breaking one side or the other. All right, that's it for me. The next Elliott Wave update will come in on Monday, the 29th. And I hope everybody has a really fine weekend, the balance of the weekend, and we'll be in touch next week.